Hello, my name is Rick Ratchford. If this is the first time that you have been a part of the FDates Precision Timing membership, welcome. We have been operating as a membership since the late 90s. It's a very long-running membership, and for a good reason. It's because FDates Precision Timing works. But you know, with anything, it takes some learning to go from whatever it is that you have been using to analyze price charts to using turn dates, which are what FDates are. And in this video, what I want to do is I want to give you a basic introduction into chart reading. And I mean real basic because we're going to go and drill down to the simple definitions of price bars. Now you might be thinking, oh, come on, Rick. I mean, I have been trading for X number of years, and you're going to tell me that we're going to have to go through the basics of what a price bar is? Yeah. And the reason why is because, one, I have no idea what your background is personally. And although I would love to get to know each and every one of you personally, it's a little difficult to do. In this case, what we're going to do though is just let's all assume that you don't know a whole lot about price bars. And if we just start from that foundation, we're going to build on it so that there'll be no question in your mind as to how to identify what a swing top is, what a swing bottom is. Because it seems that in this world of trading, you ask somebody, hey, what is a swing top? And this person will give you one definition, while this person will give you another. So, bear with me, please. And let's get down to the basics of price bars. Now, there are just 4 types of price bars. That's right, 4. There's not 5, 3, 2, or 1. There are 4. And so these are the 4 different types of price bars that you will see on any time frame chart, whether it be minute chart, hour chart, whether it be a daily, weekly, monthly, yearly, doesn't matter. A price bar is a price bar is a price bar. All right. Now you can see that I have a chart here of the Australian dollar. This happens to be the daily chart, but as I said, it doesn't matter what the time frame is. Let's just start with the very top price bar here. If you'll notice this price bar, let me expand the time frame here so that you can make them nice and big. If you'll notice, this is a candlestick chart. It doesn't matter whether it's candlestick or open, high, low, close. It's all the same. If you'll notice, it has a high here. It has a low here. Now, what you want to do is you always compare a price bar to the most recent price bar, which would be this one right here. So you compare this price bar with the one just before it in order to identify the price bar. You can see that its high is higher, its low is lower. This price bar pretty much encapsulates or envelops the previous price bar. This here is referred to as an outside bar. It's got a higher high and a lower low. It's an outside bar. Now let's go to the very next bar, this really big range bar right here. Now if you'll notice, it has a lower high than the previous high. It has a lower low than the previous low. This is simply a lower low price bar. Now look at this third price bar right here. Notice that it has a high that is lower than the previous high. It has a low that is higher than the previous low. Okay? It has a high that is lower than the previous high. It has a low that is higher than the previous low. In other words, this price bar is pretty much enveloped by the previous bar. This is called an inside bar. It's an inside bar because it's inside the range of the previous bar. Up here, remember, was an outside bar because it extends outside the range of the previous bar. Here you have an inside bar because it is within the range of the previous bar. And then our fourth and final bar is, well, it happens to be the fourth one that we're going to look at here. Notice it has a higher high than the previous high. It has a higher low than the previous low. This is referred to as a higher high price bar. All right, so here's what we have. We have an outside bar, we have a lower low bar, we have an inside bar, and we have a higher high bar. Those are the four bars that you just need to know how to identify. So as we go through this chart here, we can just say, okay, lower low bar, higher high bar, another higher high bar, an outside bar, an inside bar. And it looks like we have another outside bar, another inside bar. We have another outside bar. We have a higher high, another higher high, an inside bar, an outside bar, a higher high. Now we're going to go into swing tops and swing bottoms. Now, I did not come up with swing tops and swing bottoms. I didn't come up with these four bar types. A lot of my influence comes from learning GAN methodology, all right? And that includes swings, swing tops, swing bottoms. I went by the definitions that GAN provided, and they work. Inside bars, we'll start with that one. Inside bars can neither be a swing top or a swing bottom because they just will never have a higher high or a lower low than the previous bar. They're inside, right? So that one's the easy one. A higher high bar, any higher high bar, any higher high bar has the potential to become a swing top. Just the potential. There are things that have to happen before it can confirm as a swing top, as we will cover shortly. But a higher high bar, any higher high bar, has the potential to become a swing top. That's important to keep in mind. Any lower low bar, has the potential to become a swing bottom. Doesn't get any easier than that, does it? What about outside bars? Outside bars have a higher high and a lower low. Can you guess what potential an outside bar has? Well, if you said they have the potential to make either a swing top or a swing bottom, you would be correct. Higher high bars have the potential to become a swing top. And that includes, of course, the outside bar because it has a higher high. Lower lows have the potential to become a swing bottom. And that also includes an outside bar because it has a lower low. So now that we have identified the four different types of price bars, and we have identified what their potential is, the question now is, well, what would turn a potential swing top into an actual swing top or a confirmed swing top? These terms that I'm using, potential and confirmed, we use them a lot in this membership. So let's say, for example, here, we're going to go off the very last price bar right here. Looking at this, I see the high is 0.7669 and that one's 0.7668. So it has a lower high, it has a lower low. Okay, so we identify this price bar as a lower low price bar. And a lower low price bar has the potential to become a swing bottom. What is required to confirm this price bar as a swing bottom? What you need to have happen by one or more subsequent price bars. That means price bars that will follow. And in this case, it's a daily chart. So the next day, next trading day, I should say, in case it's Friday, a weekend doesn't count. So the next trading day, if the low of this potential swing bottom, this lower low price bar, is not violated, in other words, price does not go below that low, but rather a higher high price bar forms. It could be the very next price bar. It can be 2 price bars later. But what you need is a higher high price bar or an outside bar, because an outside bar has a higher high as well. That low must hold until a higher high follows. So let's just see what happens here. So here we have our lower low price bar, which is what? Our potential swing bottom. The next price bar, we have an inside bar, right? An inside bar. Well, an inside bar is not a higher high bar, is it? So at this time, no higher high has occurred after our potential swing bottom price bar. But the low is still the low. Nothing has made a lower low. So let's continue on. All right, now we have an outside bar. You notice that it's always compared to the previous bar. You don't compare it to the bar you're waiting to be confirmed as a swing top or bottom or whatever. So here we have an outside bar. What does an outside bar have? It has a higher high. Because it has a higher high and because the low of our potential swing bottom has not been violated on the downside, that is a confirmed swing bottom. We now have a confirmed swing bottom right here. So prices moved down to this low and then had moved up to that high. That's what a swing looks like. We have confirmed that as a swing bottom. Now we can move on. Here we have an outside bar. An outside bar has the potential to be what? A swing top or a swing bottom. Another outside bar. Well, this outside bar has taken out the previous high. It has also taken out the previous low. So this previous bar is no longer in consideration as being a possible swing. Out the door. It's not a swing. But now we have this new outside bar. And what does an outside bar have the potential to become? A swing top or a swing bottom, right? It has a lower low and a higher high. It could be one or the other. For it to be a possible swing bottom, we've already discussed it, it has to eventually be followed by a higher high. But for it to be a swing top, it must be followed by a lower low. All right, we have a higher high that has just formed after our outside bar. So what did that just confirm the outside bar as being? A swing bottom. Now, this presents a situation that many, let's just say those who don't really get down to the advanced topics of chart reading, tend to have a trouble grappling. How can you have 2 swing bottoms in a row with no swing top in the middle? Prices have to go swing bottom, swing top, swing bottom, swing top, swing bottom, right? How can you go swing bottom, and there's no swing top in the middle? Well, you've just seen it happen right here. We have a swing bottom here, we have a swing bottom here, but we don't have an official swing top here. Well, we do, but not on this time frame. This is a daily chart. Somewhere here, a top had to occur for prices to go back down after making a swing bottom here. It went up to a top, which I could tell you is right there. Then it came down to here and then moved up to here. But you can't see it on this daily chart. That happens sometimes. It makes you want to hit yourself in the head and say, why am I even here? Just kidding. I have no idea. If you go down to an hour chart or a minute, one of the minute charts, a 15, 30 minute, 5 minute, you will see that prices had moved all the way down to a significant bottom right here. Then you will see that prices moved up till it made this high, and then it made this low, and then continued up. You'll see the old W on a lower time frame. We're looking at a daily chart. That's all we care about right now is this time frame. So just know in your head that yes, a top did occur in between the two bottoms. A top has to occur. But on our chart, we just don't have a swing top. All right? There's no swing top between these two swing bottoms. I hope you can wrap your mind around that. It's just a matter of being familiar with time frames. Different time frames gives you different pictures to look at. It's how far up above the forest you have to be looking. As you keep getting closer down to the forest, you start to see the trees a little more up front. The fractals start to become mountains. Here we have now a confirmed swing bottom following another confirmed swing bottom. And we have this new higher high bar. So with a higher high bar, it is what? It is a potential swing top, right? What would make it a confirmed swing top? Well, it would have to be followed by a lower low. But when it's followed by a lower low, or when that lower low happens, that high must still be intact. It cannot have been exceeded. As long as that high is not exceeded, it will always be a potential swing top. Let's look at the next bar. A higher high bar has occurred. It has taken out the high of the previous high. So this bar is not a swing top. It's already had its high taken out and it was not followed by a lower low. So now we have a new higher high bar, which is our new potential swing top. And it's followed by yet another higher high. So we have a new potential swing top. It's followed by an outside bar. Well, now here's the situation. Its high was taken out, this previous bar. Its low was taken out, so it can't be a swing. But this price bar right here is an outside bar. It has a higher high, it has a lower low, it has a potential to be a swing top or a swing bottom. Well, let's find out which one it became, if any. It's followed by an inside bar. So it is still not confirmed as a swing top or a swing bottom because an inside bar just doesn't give you a lower low or a higher high. And let's see. Okay, there we go. And now we have a new higher high. Well, now that we have a higher high that has followed our outside bar, which has a lower low and a higher high, well, we know that that outside bar's higher high has been taken out. Okay, this new higher high has taken out the outside bar high. So the outside bar cannot be a swing top. However, the low of the outside bar, the lower low, is still intact. No subsequent price bar has made a lower low than our outside bar. But yet now that lower low has been followed by a higher high, which confirms our lower low as a swing bottom. Take a look at this pattern so far. We have swing bottom, swing bottom, swing bottom. 3 swing bottoms in a row. And again, we have no swing top showing on the daily chart here. But clearly, prices had to swing down because the low of the previous day or two or whatever was exceeded. It was taken out. That means prices had to have started going down again. And then now it went back up again. So you can't ignore the existence of a swing bottom, even if you don't see the swing top. Why am I emphasizing so much about this invisible swing top? In this case, there's 2 invisible swing tops. Over the last 2.5 decades plus that we have been in this membership, and over the 3 decades that I have been analyzing and forecasting market turns, it never fails that I run into traders have a hard time understanding that you can have tops that just aren't visible on a certain time frame because you have to delve into a lower time frame to see it. For our purposes, we don't need to go look for it. We already know how to identify swing bottoms and swing tops without even going to a different time frame to see, was there a top in between? We don't care. We only care about the time frame we're trading. And in this case with FDates, we're trading the daily and we're trading the weekly time frames. So here we have yet another higher high. What is a higher high? A potential swing top. In this case here, it is followed by a lower low, which is all we need to confirm this as a swing top. And hey, lo and behold, we now have a visible swing top on our day time frame. Okay, you probably started wondering, are there any visible swing tops on a daily frame? Yes, of course, plenty. But now you know that you can have swing tops with no visible swing bottom in between for a particular time frame. That's what happens when you have things like inside bars and outside bars. It's just the way it is. So, you learn how to read a chart and then everything falls into place. Here we have again, and I think we're coming to the end. We have a lower low price bar here, and as we just peeked at, it has now confirmed as a swing bottom. Why? Because it's followed by a higher high price bar. All right. Well, I think I've pretty much run that down really, really good. All right. So we've identified the 4 different types of price bars. We have the higher high, the lower low, the outside, the inside. We know that a higher high has the potential to be a swing top. And if it's followed by a lower low while the high remains unbroken, then it becomes a confirmed swing top. If its high is taken out before a lower low occurs, then it's just never confirmed as a swing. A lower low price bar is a potential swing bottom. The only way it could become a confirmed swing bottom is if it's subsequently followed by a higher high while the low holds. If the low is taken out before a higher high forms, then it can't be a swing bottom. An outside bar is a potential swing top, potential swing bottom. For it to confirm as one or the other depends on whether a lower low occurs later while the high is holding, it would be a swing top, or a higher high forms later while the low holds, and then it's confirmed as a swing bottom. And you have an inside bar. And an inside bar cannot be a swing top or a swing bottom. There you go. Thanks for watching. I'll see you in the next tutorial.